Good evening. It's Sunday, 1st of September 2024. September is a wonderful month for the markets generally. Before we go further, this is Vijay here. Welcome to yet another episode of our weekly market commentary. Last week was wonderful week for the bulls. While the bears tried every trick in the book, the bulls prevailed at the end of the week. Last week also was a time when MSCI index rebalancing took place. And on Friday, for instance, the Nifty NSC volumes went up to 2.24 lakh crores. The average volumes previously were about 1.15 to 1.3 lakh crores, which is a doubling of the volumes. What it did yesterday was, on Friday, was that a lot of supply got absorbed through the MSCI rebalancing, which means in many stocks which are under pressure, for instance, HDFC Bank could be one example, may now find it free to go on their own path. In my opinion, the path is up. It may be a steady path, but it may be, it is likely to be up. Now, that was as far as the MSCI rebalancing was concerned. Nifty hit an all-time high, closed 83 points higher on Friday. Bank Nifty closed up about 200 points. Micro cap index did very well at 2%. Realty picked up for the second consecutive day, close to 2%, 1.83 to be precise. Pharma, as usual, which is the darling, did a 1.5% jig. Now, the US markets have been on a tear. US Dow Jones did a 228 point rally. Then you had a Nasdaq, which is almost 200 points, and S&P around 56 points. What this is telling us is that globally, the markets, the equity markets or the risk markets, have taken cognizance of what the Fed chairman said at Jackson Hole and are now buying into these risk assets as they did in the past. I had mentioned last week that your Fed had eased at various times and how the markets behaved. And I had mentioned that Sensex 1 lakh is not out of the realm of possibility in the next 4 to 5 months, say by around budget or let's say by Pongal time. Now that may look ridiculous, but I had given my reasons. I said 1987, 1998, 2001, 2007, and 2018. All the time when Fed reduced interest rates, uh, there was a gush of capital in the risk markets because all the other central banks begin to follow what the Fed does. So if Fed is going to reduce interest rates in the March September meeting, then RBI will almost certainly do it in October. And Fed is not going to stop at one. It will continue over meeting because their double commitment, that is employment as well as inflation. So there, in terms of inflation, they feel that they're going towards the 2% goal, and unemployment is increasing, so they need to reduce interest rates. It is common sense that if you reduce interest rates, things will ease off in the economy. However, central bankers live in their ivory towers, but we are governed by what central bankers do or not do. So once the central bankers, Fed, for instance, moved away from the stance of higher rates for longer time, and then moved to neutral, and now they are now talking of easing. And Fed chairman said that he will do everything in his power to see that things come to normal. Now, in such a case, we may get a 50 basis point, we may get a 25 basis point. That is not relevant. What is relevant is the change of stance. When the Fed changes stance, we need to change stance in our thinking on the market. What we saw in the last 2 years, 2.5 years, from January 2022 till now, has been Fed tightening. Now you're seeing Fed willing to loosen. And once they loosen, it is never one and done. Always goes on for some more time. So risk markets will do well as they have done in the past, is my hypothesis. So therefore, I think we should relook at how we look at markets. Some time ago, I had mentioned that Bank Nifty is trading at a 10-year low PE. How is it possible that weather way of the market, Bank Nifty, which actually tells us where markets will go? I've been studying this data from 2002. How can we expect the markets to contract and come down when Bank Nifty is at 10-year low of PE? Now, I have tried in my own life to fight the Fed, and every time I try to fight the Fed, I have turned out to be a loser. Now, in 2001, I fought the Fed. Okay, I lost for about 3 weeks, but after that, the Fed could not even challenge the way the market was going. So that is a rare case. But even then, the Nifty went up by 16%, 16 to 17%. So now we are staring at a situation where things are not that bad. As far as the equity markets are concerned, this is the highest level of equity markets which we have seen every time before a Fed cut. Every time before a Fed cut, there is a crisis in the equity markets, the risk markets. This is the first time when there has been no crisis. If you look at from 1987, when this concept of cutting rates, interest rates happened in a very big manner. So therefore, I think that we should just go with the flow, and the flow says that the markets are likely to go up, drift upwards, or make a parabola. We don't know that, but what we are seeing is whatever is being thrown at the market in terms of negativity, market is conquering it. It looks like the bears at these levels are more confident than the bulls. If you look at the video, I mean the business channels, the anchors are all talking of caution. The fund managers are talking of caution. Now, if fund managers are looking at caution, then they should close their fund. They should not allow fresh entries, but they're not doing that. They are bringing in newer and newer sectoral funds. So this is double speak of the fund managers, which is very, very common. So you should not go by what is happening. At least I don't go by what is happening on the business channels. Sooner or later, they'll get a FOMO and then they will come and buy heavily. For instance, there is one fund manager, let me not name him. I respect him a lot. He's one of the very successful fund managers. He advocated moving away from IT for the last 1.5, 2 years. Today, he is now coming on TV and saying that his fund has got about 9% weightage to IT. So you are now buying IT when it is all-time high. But I don't think he's wrong. Probably has realized that IT will do well. So he's jumping in. He's left his ego aside. That's a sign of a very good investment manager. He has accepted it is wrong and now he's jumped in. And there are a lot of people who follow him. If that is the case, IT will not stop here. Now he's also bearish on autos. Autos are not doing well. IT is not doing well as far as the fundamentals are concerned. But as far as technicals are concerned, autos are doing well. For instance, today's numbers, the monthly numbers, are not that great. But then the market will turn around and say, what happened in August? August is not a month where sales are any great. The festival season, the RBI reduction, expected reduction, is likely to push the sales of two-wheelers, four-wheelers up. That's what the market may feel. The market is likely to feel. So therefore, you may be surprised. Even though the monthly sales are not that great, the auto stocks may start moving up in anticipation of good sales. So this is something which we need to understand. So again and again, I come to the point that if you fight the Fed, you will lose more all the time. Not more often. It's all the time. It's except that the even in a bubble like which had been burst in 2001, Fed was able to move the markets for 16% on the Nifty, which is big. 16, 18% on the Nifty will mean it'll take us to 27,500, 27,000, which nobody is talking about. People are afraid at 25,000 and they feel one should be in cash. Why should you be in cash if you look at history? History doesn't tell us to be in cash. In fact, history tells us to be more aggressive for the short term. I'm not suggesting anything like that because I'm not a SEBI registered advisor. But what we are doing in our portfolios is clearly that we are fully invested. We are not afraid. We don't need to be afraid based on history. However, markets are never, the same. So we need to keep a close eye on our stop losses. But should you be scared? I don't think so. That is the point I'm trying to get here. So therefore, I am going with a positive frame of mind. I continue to go with a positive frame of mind since I realized that something has changed when Nifty was 23,650 in end June. Now, that might not have fetched great rewards in the interim, but I think keeping a positive stance will help us more than keeping a negative stance at this point of time, even though we may be at all time highs. After all, the top can come only at all time highs. So we do not know when the top is there. We cannot even predict it. For all I know, next week we may have an intermediate top. We don't know that. For before that, if the market may go 500 points. So I do not want to chase tops. I only am looking at Fed is there to help us, to help the bulls. I want to be with the Fed in the Fed camp. So this is what I plan to do, and that's what you can take your own decision. And whatever you do, I hope you have a successful week next week. I will come back tomorrow morning with fresh information on what the Asian markets are doing or any other information which may affect the Indian markets. Till then, have a restful Sunday. Thank you and good night.